Hey, what's going on, guys? I'm Steve, and welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, hit that subscribe button. Trust me, you will not regret it. And if you're a returning subscriber, guys, welcome back. Guys, tomorrow is the start of the FOMC meeting, which stands for Federal Open Market Committee. And this meeting is a two-day meeting, that entails the Feds going over all of the numbers that they have and deciding how many basis points they're going to raise for the next interest rate raise, right? Now, it's expected it's going to be 0.75. Will it be 0.75? Nobody knows, but that's what they're expecting it to be. This is what we know for a fact right now. Regardless of what you're hearing or what you're hoping for, this is what we know for a fact as of now. Inflation is still very high, right? It's not moving as fast as they anticipated. That's number two. Number three, consumer spending and borrowing is happening still at an unfavorable pace. I don't know how long they thought it was going to be before they started seeing any type of increments, but like I talked about before, it's hardly a dent that's been made, and it's not even noticeable. The Fed's forecast is to slow the inflation. Being that the dent that they made is not very significant, they've extended it in time of where they think this thing will end, where they'll see a break. It was end of 2024. Now some are saying mid or end of 2025. But the bottom line is this, guys. Until the consumer behavior will change or has changed, the Fed's going to be relentless. They're going to be hawkish, and they're going to do whatever they got to do to make this thing come down. No matter how much pain or arm twisting or stabbing they got to do, no pun intended, they're going to go through with the pain. And the pain is this: job loss, company layoffs, and slowing company growth. Those are the main three things they're going to do, because they got to cut this spending down by all costs. Because if you really look at it and do a lot with the numbers, yeah, there's been significant amounts of things happening, but people are still buying cars. Even with the interest rates high, people are still buying cars. Some people are in positions where they're still buying houses. And that's the thing that's crazy, with the numbers of what's going on with the housing market. Now, with the percentage rates up there like 7%, it's like an extra $1,000 to your mortgage. Who's still buying houses? So, people are still doing what they're doing. So consumer sentiment, the consumer is still out there. You and I, we like, man, nobody care about that right now. And the Fed don't care. And they're like, okay, well, you ain't gonna care. We're gonna make you care eventually. So, it's just two speeding trains. Us wanting to spend money and wanting to buy things, and them like, nah, you're not gonna buy nothing right now. It's a bad time. Christmas is coming. A lot of people are going to get laid off. A lot of companies are not even hiring for the Christmas rush because they're forced to slow their growth. So it affects everybody in different ways. But yeah, they have the meeting tomorrow, and as expected, this is supposed to be 0.75 interest points. I don't see it going anything higher than that. But we don't know what the numbers are going to be. Depending on how the numbers come out, they might go a full point. And it's just one of those things like this. But the thing with this Fed thing, I was like covering the story, like looking at it. This is a very boring topic. And, a lot of people don't even pay attention to this, because like the normal American, like this stuff goes right over our heads, because this is something like, political that we don't even think about. We just see the ramifications of the prices of stuff going up and like being like, what's going on? But like, as you delve deeper into it, you get a better understanding. This is very boring. Nobody wants to deal with this, and it ain't no fun. But the reason why I bring that up to go before I say that is, I think it's tomorrow, late tomorrow, or I think it's late Wednesday in conclusion of the meeting. I don't know when they're going to reveal what they're going to do, but I think honestly, the 0.75%, even though they dropped they did all of that, Market's still open. People still buying. We had a good week last week in the market amidst all of this stuff. So the fears that the consumer is supposed to have and all this stuff for the Fed, it's not happening right now. So this thing is going to drag, and like we had a lot of values drop last week. A lot of big name stocks drop. This week we got the same thing coming up. We got a lot of nice stocks coming up. So hopefully, of course, today is Monday. It's kind of like slow in the market today. So it's kind of like a laid back day. Starting tomorrow, stuff hit the fan. You got a whole bunch of companies coming up. I think you got what you got tomorrow. Pfizer. These are the ones that I have. Pfizer. What else? I looked at the calendar. I can't remember. But yeah, we got some good stocks coming up this week, guys. Stock earnings. So it'll definitely be another interesting week. I mean, big names, man. So a lot of stuff will just be falling in your lap. A lot of values. But yeah, man. The labor report comes out Friday, 8:30. That's another thing I want to talk about. We'll see what they're gonna say about these jobs. And this is like a real touchy thing, man. I mean, especially around the holidays and all that. But man, the Fed don't give a damn about none of that. They gonna get this inflation thing down. And a lot of people understand, like, it's not making them bad guys, nothing, but you understand something. These people got a very important job, because depending on what they do depends on how the spending goes and inflation and all that stuff, and how we have chaos in the market and in the street abroad. I don't know about you or not, but I ain't trying to get killed going to get a loaf of bread, out of hysteria. So, I mean, it's just something I thought about. And I just wanted to talk a little bit about it with the Fed thing. I mean, with the meeting coming up tomorrow. I don't know if they're going to announce tomorrow what they're going to do with the rate hikes or Tuesday. But, yeah, it was just something, to go over. And I'm definitely anxious to see what this job report says Friday. See how we making a dent with these layoffs and stuff. I mean, because Google, Amazon, they all in their earnings, they were talking about slowdowns in the company and laying off people and having to do things like that. Some of them talking about how they had to let people go. So we'll see how that comes on to the job market and see what it does. But it's so many different factors, other than jobs and to get the inflation stuff down. That's just one of the things that happened during them trying to get the inflation down with the interest rate hikes. So there's a lot of different other factors, and I'm anxious to see what the other ones were and what kind of damage that had, as far as getting this inflation down. But just anxious. But I just want to chime in a little bit, talk a little bit about that. It's a Monday in the market. Market's down right now, barely. It's teetering, on green. But yeah, I just want to chime in a little bit. It's a Monday. Get back online, talk a little bit about it. But as usual, guys, man, I appreciate you spending the time with me. As usual, like, share, comment, and subscribe. Leave me a comment, man. What y'all think about this Fed thing? You think you're gonna go up another 75 basis points? Think they're gonna go up more? Think they're gonna go up less? I mean, go down. Let me know. So, but I'll see you guys in the next video. As always, thank you for your time and happy investing. See you in the next video.